Bitcoin, the original cryptocurrency, is no stranger to volatility. It has experienced dizzying highs and gut-wrenching lows throughout its relatively short lifespan. Recently, the roller coaster has taken a sharp downturn. As of March 2025, Bitcoin finds itself grappling with a significant price decline, leaving many investors bewildered and anxious. This plunge has triggered alarm bells across the crypto landscape, raising questions about the future of this once heralded digital asset. The turbulence has been impossible to ignore. From its peak, Bitcoin has shed a significant portion of its value, erasing gains that many believed were permanent. The speed and ferocity of this decline have caught many off guard, prompting a scramble to understand the forces at play. This recent downturn is not an isolated incident, but rather a symptom of a confluence of factors that have coalesced to create a perfect storm for Bitcoin. Unraveling the complexities of this market turmoil requires a deep dive into both the macro and micro forces shaping the Bitcoin landscape. Bitcoin, once touted as an uncorrelated asset, immune to the whims of traditional markets, is now facing the harsh reality of its interconnectedness. The global economy, still reeling from the aftershocks of the pandemic and geopolitical tensions, is facing a new set of challenges. Inflation, a word that sends shivers down the spines of economists and consumers alike, has reared its ugly head, fueled by supply chain disruptions and geopolitical uncertainty. Central banks, tasked with maintaining economic stability, are walking a tightrope. They are caught between taming inflation and avoiding a recession, a balancing act with potentially disastrous consequences. This delicate dance has injected a dose of fear and uncertainty into the markets, leading investors to flee from risk assets like Bitcoin in search of safer havens. The stock market, a bellwether for economic health, is also flashing warning signs. Declines in major indices like the S&P 500 and Nasdaq, coupled with fears of a looming recession, have further fueled the risk-off sentiment, pushing investors towards the perceived safety of traditional assets. While macroeconomic headwinds have undoubtedly contributed to Bitcoin's woes, internal factors within the cryptocurrency ecosystem itself have exacerbated the situation. One such factor is the dwindling institutional demand, a crucial driver of Bitcoin's previous bull run. Institutional investors, once eager to diversify their portfolios with digital gold, have become increasingly wary. The regulatory landscape, once a beacon of hope for mainstream adoption, has become a minefield of uncertainty. Governments worldwide are grappling with how to regulate this nascent asset class, creating a cloud of ambiguity that has spooked some institutional players. Furthermore, the recent Bybit hack, a stark reminder of the security vulnerabilities that still plague the crypto world, has shaken investor confidence. This breach, along with other high-profile hacks in the past, has highlighted the risks associated with digital assets, making some institutions think twice about increasing their exposure. Section 4. Charting the downward spiral. Technical analysis, the art of deciphering market trends through charts and indicators, paints a bleak picture for Bitcoin in the near term. The ominous bear flag pattern, a formation that often precedes further price declines, has emerged on Bitcoin's charts, sending chills down the spines of even the most seasoned traders. This pattern, characterized by a sharp downward move followed by a period of consolidation that resembles a flag on a pole, suggests that the bears are firmly in control. The breakdown point of this pattern, a critical support level that, if breached, could trigger a cascade of selling, looms large, casting a shadow of uncertainty over Bitcoin's immediate future. Adding to the bearish sentiment are the pronouncements of influential figures in the crypto space. Arthur Hayes, a prominent crypto entrepreneur, has predicted a Goblin Town scenario for Bitcoin, a term used to describe a prolonged period of market downturn. While predictions, especially in the volatile world of crypto, should be taken with a grain of salt, they can nevertheless influence market sentiment, creating a self-fulfilling prophecy of fear and selling. Section 5. Whispers of a Crypto Winter. The recent downturn has rekindled fears of a crypto winter, a term used to describe a prolonged bear market in the cryptocurrency market. This chilling phrase evokes memories of 2018 when Bitcoin lost over 80% of its value, sending shockwaves throughout the industry. While the current situation shares some similarities with the 2018 crash, such as waning retail interest and regulatory uncertainty, there are also key differences. The crypto ecosystem is far more mature now than it was in 2018. Institutional adoption, while slowing, is still significantly higher than it was during the previous bear market. The infrastructure supporting cryptocurrencies, such as exchanges and custody solutions, has also improved considerably, making the market more resilient to shocks. However, the specter of a crypto winter serves as a stark reminder of the cyclical nature of this nascent asset class. Bitcoin and the broader cryptocurrency market are still in their early stages of development, and periods of extreme volatility are to be expected. Section 6. Navigating the Bitcoin Labyrinth. The recent turmoil in the Bitcoin market has left many investors wondering how to navigate this uncertain landscape. The first and most crucial piece of advice is to avoid panic selling. Emotional decisions, especially in the face of fear, are rarely sound investment strategies. Before making any investment decisions, it's essential to conduct thorough research, understand your risk tolerance, and most importantly, only invest what you can afford to lose. Diversification, the age-old adage of not putting all your eggs in one basket, is particularly relevant in the volatile world of cryptocurrencies. It's also crucial to stay informed about the latest developments in the cryptocurrency space. Keep abreast of regulatory changes, technological advancements, and market trends. The crypto landscape is constantly evolving, and staying informed is paramount to making informed investment decisions. Section 7. A future shrouded in uncertainty. Predicting the future of Bitcoin is a fool's errand. Its price is influenced by a multitude of factors, many of which are unpredictable. While the current outlook may seem bleak, it's important to remember that Bitcoin has weathered storms before. The technology underpinning Bitcoin blockchain continues to evolve and find new applications beyond cryptocurrencies. This underlying technology has the potential to revolutionize various industries, from finance to supply chain management. Whether Bitcoin will reclaim its former glory or fade into obscurity remains to be seen. The only certainty in the world of crypto is volatility. Buckle up, because the ride is far from over.